Afternoon, everyone. James here. I want to go through the markets quickly with you. Let's start with the dollar index. And as you can see, a little bit of a rally on Friday and Thursday as well, breaking that sort of downward trend and breaking above and closing well above the 20-period moving average. So ticking higher, and I'm looking for a correction on the dollar index up to about the 50-period moving average here at around about 102, allowing for a move all the way back up to about 104.50 and the 200-period moving average. If I draw a Fibonacci from the very top down to the bottom that we reached recently, you can see where the Fibonacci retracement levels are, starting with the 38% here at 102.69, then the 50% at 104, and the 61.8% retracement at 105.50. That's probably the most appealing and interesting place to go short. One of these two retracement levels, either the 50 at 104 or the 61.8% Fibonacci higher up. So if we do see that retracement continue, we should see the euro and the pound move down and the dollar Swiss franc move up along with the dollar yen. At some stage, though, I expect this trend to reverse, and I'm looking for the dollar index to move down to about 93. Considering that we're now trading at about 100, and we could get even higher, maybe to 103, there could be potentially 1,000 points to the downside on the dollar index, and therefore much, much higher on the euro and the pound. My target for the euro, and I'm long on the euro, is 1.2. I've got a blob drawn up there, but let's go to the weekly chart. There's my blob on the weekly chart. It's also the top 200-period Bollinger Band, and it's the 78.6% Fibonacci retracement of the move down from the high in January 2021 down to the low in 2022, September 22. So that's the 78.6% fib and my target, but I think we could get up to 1.2, and that would match the sort of target I have on the dollar index. We're currently trading at 1.12 now, having retraced back to the breakout zone. So I expect we'll find some support right at about more or less where we are currently trading. So that's the euro US dollar. We're also short on the euro yen, and that one's moving sideways across the page. If you want to see my comments on this, look at the previous videos, but my target is essentially down at the bottom of this red arrow at around 144 to complete this pattern. Rally, flagpole, bear flag, and a move down to complete the pattern. And at the same time, we're long on the euro US dollar. We're also short on the US dollar Swiss franc. So basically the opposite direction on a very similar trade. But this is a hedge against the euro. And as you can see, as the euro has moved down a bit, we've moved slightly higher up here on the dollar Swiss franc. At some stage, I'll be looking to add more longs to the euro to ride this up towards 1.2. And at the same time, I'll take profit on the long dollar Swiss franc. That's this trade. We're long from over there. If I look at this on the weekly chart, just to show you why we went long here, it's basically a mean retracement play, bouncing off that long-term downward sloping trend line, which is a pretty important under-over level for the dollar Swiss franc. We'll exit this trade as soon as the euro forms a base and begins to move back upwards. And at that point, I'll add to the euro longs, and then I'll take profit on these longs, and we'll be long only on the euro. Okay, on the stocks page, once again, just to reiterate what I said in the last videos, I'm looking for a move up into around about 20.5 on the NASDAQ, maybe 21,000. That's the 78.6% fib, and then for a retracement down from there. We're currently long on the NASDAQ with a tiny short hedge slightly lower down, and we're also fully hedged on the S&P, looking to get short on this one too. I still regard these as both being in bear markets for a number of reasons. And until or unless we make new all-time highs on the NASDAQ and the S&P, I'll be looking to go short. I'm looking to sell into this blob, which I drew in here about a month ago on the S&P for a move back down to these recent lows and then lower. We'll have to see how this market opens up in a few hours' time. Tonight, it's Sunday, and whether we'll get a little gap up or down, I don't know. But I think we could still get a little bit further up on here. I don't think we've cleared out enough of the fresh, new, long FOMO bulls, which have got to be cleaned out now that the market looks like it's potentially going higher. Remember, we're still in a bear market. We corrected down over 20% on both the NASDAQ and the S&P. We've entered a bear market. And until that's proven otherwise, we'll continue to look for shorts. In line with that, we took really good profit on Mara, Coinbase, and MSTR on Friday. Really good profit on MSTR. And I'm still holding my Tesla, Google, and Target longs. On crypto, after the big rally on Bitcoin last week, we moved across the page Thursday and Friday, and now Saturday and Sunday as well. So gone a little quiet, but holding up pretty well. I added one more long tranche to Bitcoin just above 100,000. I haven't added any more since then. And we've also got long on XRP. You can see my positions down here. And we're long on Ethereum. Ethereum went gangbusters last week, going up again on Saturday and continuing to move up over the weekend. Yesterday, had a big move up. We've pulled back a little bit today. So we've gone way past my target at 2,100 on Ethereum. And I think we could now get a lot higher. I'm looking for a pullback down to 2,100 to get long again, and looking for this to ride up to much higher levels, perhaps into the 3,000s, maybe even the 4s and 5s. We'll see how we go. So I'm still long and strong on Ethereum, Bitcoin, and XRP, and I'm still short on gold. Now, gold has been coming off. I'm not going to bore you all with a repeat of this diagram, But this is the diagram that I'm working off, and so far it's playing out pretty well. We're following path number 1. We had this massive blowout rally on gold. We pulled back down to 3,200. We then retraced upwards exactly 78.6% where we got short again, and we're now moving down. Targets are down here. First of all, this trend line at about 3,200 and this recent low. The 50-period moving average is coming up along there as well. But if that fails, then I'll be looking for a move down to the next trend line and the next Fibonacci level into my blob at around about $3,000, just above or below will be fine. And then if that fails, we could get a move down to 2,700. Right now, I'm just watching this moving down and holding on to those short positions. And at the same time, I've got a long position on silver. I explained why this is in the previous videos, so go and check that out. But we're long on silver, short on gold. And we're actually in profit on both of them. And it's now the third time that we've played this little game with gold and silver, hedging one against the other and managing to make profit on both of them. So that's okay so far. At some point, I'll be looking to exit my gold shorts, get long again. If we don't move down beyond about 3,200 and we carry on moving up, then I'll exit the shorts on gold, take profit on that, maybe start to look for long positions, and then at the same time add to my long silver position and looking for a move up much higher on silver above that resistance block above us in the mid-30s, up to the high at about $50, and perhaps we can break up above that and get even higher, maybe up into the 60s. So for now, we're short on gold, long on silver, both doing okay, and that's all on this page. Copper still holding up pretty well, actually, and despite all the naysayers about the economy and copper, still bouncing off the 200, not moving down, and even holding and closing above the 100 period last week, so doing really well. Let's go across to energies, and here we've got uranium and UEC. We're long on both of these, the uranium twins that we trade. Generally just looking for this to move up. We're in good profit on both of those. And although this is not a very smooth trade, it's a zigzaggy sort of trade, and we'll be moving up slowly bit by bit, trying to buy dips and exit, take profit on some of the trades on rallies, and then rebuy on dips again. Same story with both of these, URA and UEC. Natural gas, we're still short. This funny late afternoon rally on Friday took us right back up to the trend line. And depending on how you draw this trend line, we may or may not have closed above it. I'll give this a benefit of the doubt though and say we did close inside the channel, but since then we've moved back outside it and below it again. And I think if I redraw this channel line ever so slightly, I could get this big bullish candle to have closed just beneath it. So I only have a 35% position on this, not a full position by any means, and I'm waiting to see how this opens up in a few hours' time. What I think could happen actually is that we could gap down. We may even gap down below the 20-period moving average. Notice that the 200 and the 50 are just below there as well. But if we do move up, I'm going to change this to the day chart. If we do move up, I'll expect to move up to around about $4. Notice we're at the bottom of this big order block, so it is another resistance level. We have broken up through this market structure break level at 375. So that's a bit bullish in itself. Further levels to consider. First of all, the top of this order block, just around about $4. And then the next order block into the very low fours. 420, 430, 440 maybe at a stretch. So I don't know how this is going to open up, but considering we don't have a large position and considering that we are still below resistance, in fact on the day chart, looks like we're below the trend line still, so that's pretty good. On the 4-hour chart, we just poked up through it. If we do gap up and start to form a reversal candle at slightly higher levels, closer to 4, I'll look to add on to the short position, looking for it to carry on moving down. But if we fail to hold below $4, then naturally we'll be looking for a move higher up, and I might have to consider hedging this position, depending on whether we've taken extra size. With my current position size, I'm not in any great rush to hedge, but of course I'll keep that open as an option. You can see on the continuous ETF here at Pepperstone, we did actually close fractionally above the trend line as well. And on the day chart, you can see we're actually following and holding a rising trend line, which I'm now going to redraw just to get the bottom of these candles. Let's move the bottom out here a little bit as well and just neaten it up. So there's a decent good day chart rising trend line on the continuous. Let's go back to the 4-hour chart now. And that's the way it looks. This chart illustrates a pretty similar picture. We have a resistance level just at more or less where we're trading right now, drawn across the page. If you remember when we were trading this the last time, we talked about this line quite a lot. We were actually approaching it from the top on the last occasion and looking to get short on the retest from underneath, which we did. So right now we're at resistance. Maybe we'll gap down in a few hours' time when the next trading week starts. And a good gap would take us below the 20 and below the trend line. And notice similar to the futures, we've got the 200 and the 50 period just below us. Let's switch back to that futures chart just to remind us all. And this is the 4-hour chart on the futures as well, noting the 20 period and the 200 and the 50 just below us, like we saw on the continuous. It's interesting to see how where you draw your trend lines makes a big difference as to your view of the market. Here on the futures, looks like we're below the trend line, below that channel, looking bearish, I suppose, if you look at it from that perspective. But if you go to the continuous, it looks bullish. We're above the trend line. Break below the trend line will see me adding more to the continuous ETF to go short. And at the same time, no doubt, we'll get a signal on natural gas futures as well. So to finish off energies, let's go to WTI oil. And there you can see where we're long from. Two tranches, one from over there, one from over there. And we moved up on Friday, another sort of bullish rally day on Friday. I think we're in this new range of 50 to 70. I've explained it in previous videos. Go and check those out. But I think we could move back up to around $66, $67, at a stretch $70, and maybe even with a real bit of motivation, WTI could get back up to the top of this channel, and that could be into the mid-70s. I think that's less likely though. I'm looking for a move back up into Moab. That's the mother-of-all break zone that we broke below, into this new trading range between $50 and $70. So I'll be looking to exit that once we get up to about $66, $67, and looking to go short on a reversal if that occurs up in those levels. On this page, we're still long on the dollar rand and long on TLT, and on softs and grains, not a lot changed again. Actually, sugar had quite a nice little rally. Cocoa moved up a fraction, still short on cocoa, still short on coffee. Long on corn, long on cotton, long on wheat, long on soya. We'll take profit on that soon, approaching the top of that trend line or that horizontal line. And we're also short on orange juice. Once again, looking to take profit or hedge at least once we get back down to about 210 on orange juice. Well, folks, I hope you enjoyed the video. Enjoy your trading week that lies ahead. Good luck with it. And if you did enjoy the video, I'd love your thumbs up and your subscription. And if you'd like to join the channel for $1 a month, you can do so by clicking the button below, and I'll see you soon. Take care.
Morning buzz, the market's live. Charts are crazy, watch them dive. Candlesticks, they never lie. Swing and sway and touch the sky. Buy low, sell high, that's the game. Find the trend and ride the fame. Bulls and bears, they all unite. Dance of numbers day and night. Swing, trader, swing, don't you stop. Catch the rhythm, make it pop. Don't get greedy, don't get mad. Feel the pulse, it ain't so bad.